Ciba's acquisition of Allied Colloids, presented by Jessica Sanis and Caitlin Sellier. This case outlines the acquisition of Allied Colloids by Ciba Specialty Chemicals. Allied Colloids was a specialty chemical company based in the UK. They specialized in soluble polymers, and their main customers were in mining, water treatment, and paper making. Ciba was also a chemical company based in Switzerland that spun off the pharmaceutical company Novartis. The main competition in the acquisition of Allied was the US-based chemical company Hercules. Hercules made a bid for Allied in late 1997, which was rejected by the British company. They defended the rejection through claims that the company had potential and was more valuable than the low bid. In early 1998, Allied's management was under attack and the British government approved acquisition. Allied continued to push for a higher bid, but Hercules was not willing to increase their bid to Allied's satisfaction. This is when Ciba stepped in as the White King, or White Knight, and bid much higher than Hercules. Hercules could not justify bidding any higher, and Allied Colloids became a part of Ciba. Initially, Ciba was optimistic about the costs and the debt they incurred through the acquisition. Instead, were vulnerable to a net loss, job loss through restructuring, and ultimate resignation of their CEO. Allied Colloids became a takeover target because it was part of an industry in the United Kingdom that was ahead in the restructuring process. To make themselves more attractive, they were becoming leaner and have better earnings profile. They increased efficiency in an effort to reduce production, raw materials, and energy costs. This is attractive to a company looking to potentially acquire Allied Colloids. Acquisition is in a way an investment. If the company being acquired was not performing well, it would be a bad investment and money can potentially be lost. By cutting costs and forecasting high performance, Allied Colloids made a merger or acquisition look like a good investment. As a specialty company, they offered products and services that not many others can. Analysts said Allied Colloids had been attracted bid interest because of its strong market share in a niche industry. 4/5 of its business is in water treatment additives, which have benefited from increasingly stringent environmental requirements. Acquiring a company of this sort could potentially eliminate the need to go outside the company for their particular product. This would give them an advantage in the market. This is more of a strategic motive because the acquiring company is looking to access Allied Colloids' technology, customers, and brand. Another possible reason that Allied Colloids became a target for takeover is the perception that the company had potential, but the management was hindering its performance. There was much criticism of the management and investing strategies. This led to poor share price performance, its disappointing investment performance, and ineffective response to rising raw material prices and the strength of the pound. For a company that exports a large amount of their business, a strong currency makes this more difficult. Because poor performance affects shareholders, Allied Colloids became a target of the companies that held shares in the company like Hercules. Ciba placed a high value on the gain from the merger or acquisition of Allied Colloids. One area of value is the ability to help the environment through the water treatment products. Ciba was a global leader in acrylic chemistry and associated technology, and the division's project and services were used to purify drinking water, clean up industrial and municipal effluent, and eliminate the use of solvents. Allied Colloids fits into this strategy as one of the lead global water treatment companies. This acquisition would establish a new pillar for profitable and sustainable growth in the area of water treatment additives. If they acquired Allied Colloids, they would become a leader in the segment and would allow them to enter a fast-growing market with an established global company with strong technologies. The offer that Ciba made to acquire the company was 25.6 times their forecasted earnings per share for the year ending March 1998. In addition, it was 3 times their sales in the last financial year and 23 times their operating profit. The price was 30% of their market capitalization, but Allied Colloids will only account for about 14% of Ciba's sales. The fact that they were willing to pay such a high price for the company shows that they saw a lot of potential for growth. When Hercules was bidding for the acquisition, they made it clear that they would get rid of some of the top executives Ciba used. This strengthened their bid, but they also probably saw it as an advantage. Because of the loyalty, any changes in the management team could potentially cause other key figures to leave as well. If the people that have made the technology, marketing, and sales of the company so attractive were to leave, Ciba would potentially not see the return they predicted. Ciba was able to have an increase in its income from the various business operations. This was evident from the new company they had acquired by entering into an acquisition deal with Allied Colloid. The earning before tax increased tremendously despite the unstable economic conditions that were prevailing in the market during that time. The income from the sales activities increased as it was able to offer its products and services to a wide variety of customers. This was made by the exploration of the markets which were being operated by Allied Colloid. But Ciba was able to increase its assets because it was able to value the target company's assets as its own assets, and thus included them in the financial statements. Ciba in 1998 increased sales, but since there was a high interest expense from the leveraged buyout, the share dropped to a negative 11.15 per share. The year before, 1997, was 4.29 per share. The results of having a negative EPS means that the company is losing 11.15 for every share outstanding. Looking at 1999, the earnings per share on the company reports rose to a positive 4.89. Some problems that occurred on Ciba's balance sheet were also regarding cash and cash equivalents. According to the balance sheet in the end of 1997, the reported cash was 644 million Swiss francs. In 1998, after the acquisition of Allied Colloids, the cash dropped to an astonishing of 206 Swiss francs. This clearly was a big drop for Ciba's cash and cash equivalents. The reduction of this was just under 70%. This is a negative effect that happened on Ciba's balance sheet. The winners were Ciba, Allied Colloids, and Allied Colloids shareholders. Ciba was considered a winner because they were able to expand into a well-established market space. This added strength to their company, which was the goal they had in mind. When looking at the financials, Ciba's were stronger than Hercules. Ciba benefited financially from the merger, and they were able to diversify more and enter markets that they previously were not able to enter. This diversification also reduces risk for Ciba. Allied Colloids received a higher per share price from Ciba than Hercules. Hercules offered a price per share of $155 for Allied Colloids. This would have been a loss for them, and according to the analysts, they were worth $180 per share. Allied Colloids in the end chose Ciba, who offered a share price of $205. Without Allied, the net effect of the yearly performance by each of their divisions would have been negative. With Allied trademarks, knowledge, and experience personal, Ciba was able to generate a positive percent change of 46% in sales in the additives division, which was the only positive change for that quarter. Allied Colloids and their shareholders were also winners because of the price they paid for Allied. The price paid for at $2.2 billion was more than 3 times the company's sales. This translates into a higher share price for the shareholders. The losers were Hercules and Ciba shareholders. Hercules' takeover was unsuccessful, and their final offer fell short of the price that was necessary to acquire Allied. In previous years, the company was also unsuccessful in other acquisitions. Hercules struggled with limited from expanding in multiple markets and generating new sales. The shareholders from Ciba also didn't benefit from the takeover. Net income in 1997 was a positive $172 million, and in 1998 there was a net loss of $791 million. This actually decreased the overall rating of the Ciba company, which shareholders do not like to see. Since the Allied Colloids case, Ciba has also purchased Ratio, a chemical company, in 2004. Although Ciba was successful with Allied in 1998 and Ratio 2004, the company's margin had slowly decreased over time, especially in water and paper treatment division, because of increased input costs. Ciba was forced to restructure. Even with the downfall of Ciba, BASF viewed Ciba much like Ciba saw Allied in their acquisition. BASF saw Ciba as a company with strong divisions as well as a valuable company to strengthen its overall portfolio. BASF purchased Ciba in 2008 for $5.5 billion. They were also paid more than 32% in the closing price of the stocks because they knew that Ciba was able to compete well in the paper additives market. Thank you for your time.